Well, hello, everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you guys are joining me today. I want to thank all of you who are not only here live, but being so participatory in the chat. We have Mr. James Boyd riding shotgun in the chat today, and he's an expert on all things investing and trading related. Certainly, he understands these strategies we're talking about today. So if you have any questions, don't hesitate to type them into the chat. Between James and I, we should have answers for you. Somebody had typed in that, they hope that the Fed speak coming this afternoon doesn't upset the apple cart. And all I can say about that is it doesn't take much, it would seem, to upset the apple cart these days. 2025 seems to have been characterized by a lot of volatility. And, and so how do we trade given we're in times where there's a lot of volatility, and how do we take advantage of that? And that's one of the things that we'll brush on today. We're going to talk about breakout. So today is officially breakout day. So if you have a breakout patch, feel free, to slap that little sucker on, and away we'll go. If you're not following us on X, I consider this your formal invitation. My handle at Barb Armstrong CS, James at James Boyd CS. And just before we kind of get into the thick of things, know that options carry a high level of risk and aren't suitable for all investors. We are going to look at a number of option strategies today, so be aware of that. We also use the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn and hone your trading strategies before you consider trading in a live account. This class is called Trading Price Patterns, so the focus is on technical analysis. That doesn't mean you don't want to do some additional digging before you place a trade. Be aware of what's going on with earnings, globally within the markets, and specifically, what's going on in our country. And tariffs, have had a big impact on the market so far this year and may continue to do so. And so it behooves us to be aware of all these additional things as well. Know that one of the nuances or differences between Paper Money and a live account is that short options can be assigned at any time prior to expiration in a live account, but we won't see that happen in Paper Money. Okay, so what we're going to do is come out to the platform. Oops. And, if we start with looking at the S&P 500, this at one point from, February 19th, through the beginning of April, it was down over 21% and has now rallied pretty dramatically. And, the bulls, in looking at this current trend, if you'd drawn a line, could have said, we see not only a bull flag pattern happening here with an entry today, but we also see a diagonal resistance breakout where, it broke out, it, came back and didn't come all the way back to retest, but, it turned out that it was a true breakout, not a fake out thus far. That isn't to say that, the bears are gone back into hibernation and we may not see them again. But, because we saw them on Google today, for example, but this trend is looking more optimistic from a bullish perspective. And of course, by the end of the day, that could change. When we look at the NDX, this pullback was even more dramatic, probably over 23%, but, pretty nice recovery so far, looking pretty similar to what's been happening on the S&P 500. It hasn't got back above this 100-day moving average yet. And if I change that to a 200, it wouldn't be back above that one either. If I came out here and we changed, this is a 200. Let's see if I change it to 100. I did that on another account, I guess. So, this is even a little higher, but, the next potential resistance level, some would say might be around this 2312-ish range. And, it came up kind of into the neighborhood, pulled back, and it looks like it may be about to have another run at it. When we look at the Dow, kind of similar. These charts all look similar, in many ways, don't they? I guess we can get rid of this line, but diagonal resistance breakouts all over the place. And then when we look at our VIX, it's down a smidge today. It's kind of been up, it's been down, but we're still at 24, which is at the high end of the range of where it's traded over the last year. If I move this up to 24, where it's currently sitting, you can see there have only been like 3 or 4 times in the past year when we have been at or above. And by times, I mean, if I bring up a 2-year chart, and I extend this to the left, so, we went a whole year and didn't get that high. And then in 2024, we had one occurrence where it kind of swept above for a pretty short period of time in August of last year. And then, again, it spent one whole day above that in December. And then we had a little, blip in March. And then we had this extraordinary move in April, which coincided with, the tariff announcements. And the market likes certainty and stability, and there's been a certain lack of certainty with many things, and that is reflected in this index. So given that it's still high, there might be some opportunities to sell. Or if you say, well, it's come down a long way, but if your expectation is that it's not likely to go back below 20 soon, then you might be indifferent as to whether or not you buy or sell. Okay, so these are all things that we want to take into consideration. So let's look at some breakouts or at some charts. And one of the things I get asked a lot is, how do you come up with the examples that you chose to trade? So I thought I'd show you also a couple that, didn't make the grade. And if we look at Shopify, there's 2 things I want to point out. So we do have this diagonal resistance breakout. We have an inverted hammer, which if you're just looking at that candle, technically requires confirmation. So you'd want to see the next day, that candle of the next day, trade above the close of today's candle, or close above the body of today's candle. But we also in this have a Harami pattern. And so you might say, well, this Harami pattern where today's body is totally inside the previous days, that's all the confirmation we need. And while that may be true, we do have earnings coming tomorrow morning. And so if you wanted to do a trade as an earnings trade, you could certainly do that. But, with a lot of stocks, they can both gap up or gap down. And, you could very quickly, especially if you did something like a spread trade, it could either go very, very right or very, very wrong very, very quickly. And so some might say, well, if I'm trying to be more conservative and try when there's so much volatility and it seems a higher level of risk in the market to begin with, perhaps I don't want to add that additional level of risk. And that's certainly something you may want to take into consideration. So for that reason, we're not placing a trade on Shopify. Now, if we come to Sherwin-Williams, SHW, here's another diagonal resistance breakout. Like I said yesterday, in getting started with technical analysis, it's what all the cool kids are doing these days. Like, we're seeing this pattern on all the major indices. So is it surprising we're seeing this on a lot of individual stocks? And so again, some might say, well, you're coming in kind of early days here because we have this inverted hammer, or this hammer pattern, and you might want to wait for it to, a close above the high of the low day tomorrow. But if we look at this and we say, yeah, I'm willing to do that, it's, the earnings announcement was strong and it's moved up since. Come to the trade tab. And if we look out to June, and let's say we wanted to do, and I'll just compress this a bit, we wanted to do a long call vertical because we're bullish. One of the things that we may want to look at here is our spreads. And do these pass muster. Well, this is 30 cents. And, you know, if we did a 350 and a 360, I mean, one thing about Sherwin-Williams is it only trades monthly. So we have volume here. This is, you know, we want to see 1 million shares a day or more. So is this a low day for trading? Well, you know, yesterday, 600 and some, 1,000,003, 1,000,004. So typically it does trade over 1 million shares a day. So we're good there. And we've got lots of volume on these contracts. So we're good here. And at 350 and 360, if we're coming out 44 days, we're giving it quite a bit of time. And our bid-ask spread, we'd want it to be under $1.30, and it's about 80 cents. So, you know, we're kind of closer to 5%. So if we looked at buying a vertical, it would cost us $5.50. And, you know, if we're looking at our smaller account, we really want, you know, to be in that $500 range. So this is at the top end of the range. One of the things that we talked about, and if you look at the example trading plan and the trade management mini sessions, we want to exit if we're either up 50% or down 50%. And we said, you know, with so much uncertainty, maybe we want to be more modest in our aspirations. And so the trades that we did as example trades in the last couple of days, we put in a target of 25% instead of 50. And then the exit would be modified also. If it went down more than 25%, you might want to exit. So if we took our 555 and we multiplied that by 1.25, then we'd want to get out around 695. And so we take our single order, we're going to change that to first trigger sequence. We're going to right click, create an opposite order, and say, hey, if this gets to 695, and are we leaving money on the table? Yeah, quite a bit. Because you know, our max gain would occur when it got to $10. And, you know, so the most we can lose on this is $555. We could make $445. And we're saying, hey, if we can make 140 of that 445, we're going to be cool with that. And if you say, like, this woman is crazy, why wouldn't you, you know, want a bigger portion of it? Well, you could. I mean, you can make your trading plan whatever you want to make it. And so we're going to look at this. We did one of these on Monday and it hit our target on Tuesday. It was a bearish trade. I believe it was AMD. You know, we'll look at that on Friday in our trading a smaller account, which I treat as a companion class to this class actually. So we're going to put this in our long call vertical, and it's a 25% gain is our target. Instead of, you know, 50%, which is what we've been running with, you know, for the last while. And so we may go back and look at this again and say, you know, maybe we should have hung in there for 50%. Somebody's asking why they only trade monthly. Yeah, and I'm not sure. They may believe that there just isn't enough demand, you know, to offer weekly options. And the next time we look at it, it could. Josh is saying, is today sponsored by the letter S? And it is not. But we did start out with 2 S stocks, didn't we? Yeah, so that's Sherwin and Shopify. Let's come over now to the letter V, and we're going to look at Visa. And one of the things that you may have noticed is that the financial sector, you know, has been coming along. And once again, like even on this sector, what are we seeing? Diagonal resistance breakout. Yeah, you know, and this series of kind of bull flags. And today, you know, when we look in on this kind of bull flag pattern happening, right? And Visa, you know, similar. like I said, it's kind of what all the cool kids are doing. So when we kind of look at this also and say, I see a series of higher lows and higher highs setting up. So a trend reversal. Just one sec. I'm just bringing up my drawing tool. It must have gone for a short nap. Okay, here we go. So, it kind of came up, pulled back, and I'm kind of generous hand here, came up, had a little 1 day pullback, came up, 1 day pullback, came up, 1 day pullback. That's a pretty bullish trend when your pullbacks are all of 1 day long. And so with this, it's trading at 350.69. And when I looked at this a little earlier, we could do two things. We could do a long call vertical, which is more directional, and we tend to kind of try and bracket where it's currently trading, but it's kind of at an even number. So we could do 350, 355, which is more bullish, a long call vertical. Or could we come down and do a short put vertical? Maybe one of the benefits of this higher volatility, maybe we could get down here around 340. And, yesterday's candle would be considered a resistance level. The 10-day moving average might be considered a resistance level. We're close to the 30 here. And so let's look at a couple of these, and, maybe we could do one of each type of strategy, and then we can compare them. And I know some of you love that, and some of you go, just tell us the best strategy. Well, it depends on what your goals are and what your comfort level is with risk and all of that stuff. So it looks like we already have a long call vertical on Visa. And so if we come to the monitor tab and look at our long call verticals, we do have that. And let's see when we put that one on. We put that one on Monday. So, it looks like that one's working out pretty well, isn't it? So here we go. So maybe let's layer in then, since we've already got a long call vertical on this, let's look at adding a short put vertical. And so we're going to come to our trade tab. We're going to come out to this 23 days to expiration. We're thinking, could we look at something at maybe 340 or below? Again, does it trade more than 1 million shares a day? Check. Does it have at least 20 times the number of contracts we want to trade? Check. What's the probability of this being in the money at expiration? This is based on where it is currently, the stock is currently trading. It's saying you've got about a 30% chance of this trade going against you. Or being in the money at expiration. And so that means you got a 70% chance that it won't. So we're going to look at selling a vertical. And we get almost $1. We could say, hey, we want $1. We don't want to do this. But that's a 25% return on our risk, right? Because we're risking $5 minus the 1. We're risking 4. And if we can get 1 divided by 4, we're risking 100, that's a 25% returns for a trade we'd be in for 23 days. And so if we're okay with that, then we'd go ahead and put that in. And, if we're saying, well, if we can only get 97, we're okay with that. We're, again, single order to first trigger sequence. And our guideline for our example trading plan is when we've got 80% of our max gain, we're going to close the trade out. So if I said, well, 97 times 0.2, that's 19 cents. So when it's worth about 19 cents, we'd like to buy it back. Now, if we looked at this again on Friday and we already had 50% of our max gain, might we choose to close it out? Absolutely. Or if it looks like, maybe it's going to turn and pull back, might we choose to take it? And we're risking $400 here. So how many of these are we going to do? We're only going to do one. Because we're risking 402, we don't want to risk more than 500. We're going to put it in our short put vertical, and then we can compare this to the long call vertical. with the same, expiration. Okay, so that's Visa. How about Goldman Sachs? There we go. So when we look at Goldman Sachs, again, and if you're not familiar with the company, you can just come to the Analyze tab. We can see that this is in the financial space. It is a financial company. They do mortgages, commodities, all kinds of stuff. And you can scroll down and look at some of the fundamentals also, but similar to what we're seeing, many other places, it was trading in this downward range. We saw a diagonal resistance breakout. It pulled back. And it looks now like this 30-day moving average may have swept in to act as a support level. It came up, pulled back, and it's hard because it's sitting right on that 10-day moving average. So yesterday we had this inverted hammer, and today we have the confirmation. Currently, now it could change by the end of the day. Like someone in the chat, tech is saying, it could change on a dime, and it certainly could. But from what we see now, this looks like this uptrend may be continuing. And so could we do a similar thing? Could we come here and look at a short put vertical below? And yesterday's low was 547. So could we come down to like 540-ish or lower? So I'm going to so let's just check it out. So if we came out 3 weeks, now why would I want to look at 3 weeks instead of, say, 44 days, almost twice as long? And we can have a conversation around that. But again, it trades more than 1 million shares a day on average. If we look at this 540, we have a 30-cent bid-ask spread on an $11 option, so that's acceptable. We've got 57 contracts, we're only going to do one, so that meets our criteria. So we get $1.60 if we sold the 540. Okay, now what if we came out twice the distance? What if we came out instead of to May 30th, which is 23 days to expiration, what if we changed it to June? I mean, one of the advantages is we've got a higher volume of contracts. So that would be a plus. This is saying you've got a 41% chance that this could be in the money. It's like, oh, well, maybe we want to go out further. But if I change this to June 20th, my credit goes from $1.57 for almost twice as much time to $1.72. $1.72? Like I was at $1.57, so I'm getting an extra 13 cents to be in this twice as long. Like how sexy is that? Like not very. Like, so I might just say, well, you know what? If I'm looking at this as a way of generating income, what's the advantage of the shorter time frame? Well, the advantage of 23 days to expiration is that time decay will work at an accelerated rate. So that's in our favor. What's not in our favor is that if the trade goes against us, it has less time to recover. But we have $14 worth of wiggle room here. Now, this is a delta of 35. Like maybe we consider coming out even further. Could we do the 535 and the 530? Well, let's see. And that's the probability of it being successful is higher. Well, we've got $5 more worth of wiggle room. So now we have almost $20 worth of wiggle room, and we gave up 20 cents. And so if we're saying, you know what, I'm okay with that. Single order. Sorry, this drop-down menu is showing up on another screen, but we're going to make it first trigger sequence, right click, opposite order, and when it's worth about 26 cents, we're going to buy it back. And again, this isn't set in stone. It's just It's just a guideline so that if you're out golfing or walking your dog or, whatever it is that you like to do, and somehow there we go. If I move it up, I'm going to put that in our short put vertical bucket. And so, so far we've looked at two different types of trades, right? We've looked at a long call vertical, and then we've looked at a short put vertical. And this one, we put our strikes at 535. So you just draw a line and then you can alter it. So if you want it to show up on your chart, the idea with a short put vertical trade is you want it to stay above 535. So if it goes sideways, we're fine. And we'd have ultimately, a profitable trade. Now, if volatility spikes, it might not look so good for a hot minute. If it goes up, we're in good shape. If it goes sideways, we're in good shape. We've even got $20 worth of wiggle room, so we could be kind of sort of wrong and might still end up okay. Where we're in trouble, and it no longer becomes a profitable trade, is if it goes below that 535, and especially if it goes below and keeps on trucking. Okay. Now, could we do a long call vertical, which is more directional? And so if this is at 554, and how do we make a long call vertical less directional? Well, if we come here and we say, well, it's at 554, I wonder if there'd be enough wiggle room, or enough opportunity to make some profit if we did the 550 and the 555. So now it only has to go up by 76 cents, and it's through both strikes. And how much could we make? Well, we could make 215. We could lose 285. Now, if you're more directionally, if you're saying like, I'm actually really bullish on Goldman Sachs, Barb, well then, we could say, well, let's do the 555 and the 560 because I think it is going to go up by $5. But, I'm paying $263 for that. And what was I paying for so that was $263. This one is $288. And it only has to go up like 70 cents. Like the break even, and this is a bullish trade, is like $1.50 lower, is below where it's currently trading. And so I kind of look at that and it's kind of like if you're trying to align things in your favor, so things don't have to move so much for you to have an opportunity to make a profit, then maybe this is where you want to go. And you say, okay, I'm going to go with that 25% target again. So if it gets to 360, I'm cool with that. I'm going to get out. I know I'm leaving $1.40 a share on the table, and I'm totally fine with that. And, we've got a 91% chance. Well, I'd hope so. It's only 37 cents away. A 91% chance of it coming up above the 550, a 53.8% chance based on where it's currently trading that come expiration, it will be there or above. And so we're going to come to our first trigger sequence again, right click, opposite order. We're going to make this 360. So little win, base hit. We're saying we're willing to risk. We could do 2 of these. Make that good till canceled. Confirm and send. We're risking 580. To make 420, and we're saying actually we're going not for 420. Our goal is to make 140. If we can make 140 of that, happy campers. Okay. Yeah. Somebody's saying I'm really cautious, when there's a Fed meeting, and caution, is how we survive as a species, right? But we're meeting now and we don't get to meet again till next Wednesday. So we're going to place some trades, and we're trying to do these in kind of a conservative way that, if the boat gets rocked a little bit, we're trying to position it so that we're perhaps less impacted. But there's no guarantee. There never is. Fed meeting or no Fed meeting. Okay, how about we look at Meta? And this is one of those, like when I look at it, and I look at what this company does, so yes, it had a great fall along with so many other stocks. It's in the communications sector. But when I think about, the companies, that Meta represents, Facebook, Instagram, Messenger, WhatsApp, I know very few people that use none of these. And even if they're not on social media, if they do any kind of international travel or have international connections, they will often use WhatsApp as a means of communicating. And, although this could change, I don't see the people that I know choosing not to use Facebook or not to use Instagram if they use it now. There can be some changes, but if you're just looking at what this company does, and you're saying, do you think there could continue to be demand for it? They beat on earnings, and so this is something to consider. And again, diagonal resistance breakout, what the cool kids seem to be doing this week, this bear flag, type of entry with a close above the high of the low day. So, do we have to do this as an options trade? Yeah, absolutely not. Could we buy shares? Sure, we could. And we've got our close above the high of the low day. Now, in a small account, what's the appeal of doing something like a long call vertical is that it doesn't require as much cash. If we buy one share, that's a $596 investment. Now we could buy $5,000 worth, so we could buy 6 or 7 shares, and that's, that would be fine. So we could do that, and we could say, hey, and then if it gets back up to this 740 level, and there are other hurdles that has to get passed on the way, like the 100-day or the 200-day moving average. This could be a potential, it was a resistance level before, could be again. But, what else could we do to determine a target? Well, we talked about Fibonacci's a couple of weeks ago in the getting started with technical analysis. So if we came down here, we could say, here's our 161 extension. And if you're bullish, you go from the top to the bottom. Our target might be 679. Okay. And so let's buy some stock, and we can buy up to $5,000 worth. So I'm going to come over here and say, okay, $5,000. How many shares? And let's just call it 596. We can buy 8 shares. So let's buy 8 shares, and we're going to put a target here of 679.48. So Meta, our target is going to be 679.48, and that's based on the fibs. And then I'm going to peel this off. So Frankie, in this class, we typically have a fairly high percentage in cash. Some might say, you want to put 10% in cash, keep 10% in cash. That's an individual decision. Somebody's saying Meta has good support around 600. That's above where we are now. We're at 596. So, we've been here before. But if we said, okay, it gapped up here. So if I took this 572 and I said, if it came 3% below that, we want out. So 572 times 0.97, that would be 554. and we're getting in at 596. So our stop is 554.84. And can we move it up as the stock goes up? Sure. But if we take 596, which is our entry price, minus our 550, it's actually 554.84. So let's call it 555. We're risking $41 a share. Now, if it gapped down, we could end up out and losing more, okay, than that. And that's a reality. But we're only buying 8 shares. So if I multiply that 41 times 8, we're risking under 500. Even though we're investing our 5,000. So we're going to come to our trade tab. We are going to right click. We're going to buy custom with an OCO bracket. I saw somebody ask what that meant in a class yesterday, and OCO means one cancels the other. So I'm going to change this to 8 shares and then click our, to make this a paper clip. And then when I just click anywhere on these 3 lines, it will make the quantities match. And our target is to get out at 679. We'll just leave it at 679. Or if it goes below 554.84. So there's a stock example. But it's, you know, we're investing $4,763, you know, with the goal of making $83 a share. Now, if we did make that, 8 times 8 is 64, you know, that would be a really, you know, nice win for us in this example trading account. So this is a stock with a target, and our target, just in case we're wondering, is, you know, down the road is based on the fib extension, that 161 extension. So we're going to send that in. So we're risking 40 to make potentially 80. And if we wanted, we could come out here and say, you know, change this line and make this our target, 679. And this is going to be our stock target. Now, if you're saying, hey, I've got a smaller account, I don't have 5,000 to invest, well, could we do something else? Well, we could. We could look at this and say, it's at 595. Could we do that same thing? Did we already do this on Meta? We didn't. We did it on Goldman Sachs. So could we do that same kind of thing at coming out just 3 weeks? It's at 595. Could we do the 590 and the 595? Where it's already through both strikes. And that's at 280. So as long as it stays above that, you know, we're good to go. So we'd say, okay, if this hits 350, we'd be happy campers. We're going to do 2 contracts, single order. Again, first trigger sequence, right click, opposite order, and we're going to make this 350. And so this is like base hit. We're just looking for a little win, And that's in our long call vertical group. How much could we lose? $556. You know, how much could we make? $444. But we're saying, hey, if we can make, you know, about 150, 145, we're happy. Okay. Okay. So guys, you know what? Our time, and we're going to compare this over the long term to our stock trade, because the stock trade, you know, we have a much higher target. So that could take, you know, it could take longer to hit. But one of the advantages of stocks is that, you know, time is not ticking away as it is with an option. Like the long call vertical we put on, we only have 3 weeks. 23 days. And either it worked out or it didn't. This could lollygag about, we could be in it for a month and a half. So as we wrap, here's now my ask of you. First, if you could hit the like button, what that does is it helps move things up in the algorithm so more people can find this content. Two, it also lets James and I know that you found this helpful. The second thing, if you haven't subscribed to the channel, if you could do that, and by subscribing to the channel, it just makes it easy to find all kinds of great stuff down the road, like these trade management mini sessions. I had somebody in a class today say, like, how do you customize the monitor tab so that when you look at your verticals, it does the math for you? I did a little thing here on customizing the monitor tab, and I kind of walk you through that. Also, for the trades we placed today, the long call verticals and then the short put verticals, if you wanted to walk through an example trading plan from which you can then customize and create your own trading plan, these are all under the trade management mini sessions. And then I'm hoping to get started again on these little, candlestick pattern super shorts. The goal is for these to all be under 4 minutes long. Okay, so that's a wrap. On that, hit like, hit subscribe, follow James and I in the land of X, Barb Armstrong CS, James Boyd CS. Know that there's nothing like the real thing, and the real thing will never reach out and offer you a crypto or a Bitcoin deal or anything like that. If you have not had enough education, or education for today, know that James is going to be at the podium again, trading growth and value stocks at 4 p.m. Eastern. So you'll want to hang around for that. Up next, we've got market and sector analysis, an interesting day to have that conversation with Mike Fairborn. And then we've got getting started with Thinkorswim, which Cameron May is off gallivanting about Scotland right now. So he won't be teaching today. I think it's either Ben or Brent Moores that are filling in for him on that, but you'll want to stay tuned for that one. And then last but not least, if you've never been to an in-person event, they are, in my opinion, the bomb.com. The next one is in Anaheim. It's an advanced options workshop. We're doing a virtual version of that this week, and like thousands of people have been attending. We don't have the ability to host thousands of people, but hundreds of people show up for these. Ben Watson and I will be at the one in Anaheim, and then they're heading to Miami mid-June. That'll be Kevin and and Ben, and then I'll be in New York at the end of June for the market drive. These are awesome. These market drives, they kind of start with what's happening globally in the markets, then what's happening in our country. And you can bet that tariffs may be part of that discussion. And then how is that impacting the sectors? And then how is that impacting individual stocks? And how might you as an investor choose to try and take advantage of that and they'll go through example trades. So it goes from here to here all in one day. And we provide breakfast and lunch, and at the market drives, there's a nice cocktail hour afterwards with, some pretty amazing hors d'oeuvres. So I hope you can join us for some of those. So guys, that's a wrap. Thanks to James. Thanks to the people behind the scenes. I appreciate everybody who helps make these webcasts a possibility and bring them to life. And thanks to all of you. Stay tuned for the next webcast. We'll see you soon.